Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. Okay, much like Chicago wheat and corn, to get a better definition of what is going on here, I've had to move over to a monthly chart for my weekly commentary compared to my usual daily chart. The first thing you can see is that superficially, whilst the market may look like it has a large rounded bottom originating from 2012, in fact it does not. Instead, we have a rounded bottom from 2018 to 2020, which had, prior to all the current volatility, had already been achieved. All the targets have been achieved. So instead of the large rounded bottom here, we have a more clearly defined 2014, not 2012, 2014 to 2021 double bottom. So the 2014 to 2021 double bottom had a primary target X in the 876 area. This was achieved in November last year, from which we saw a small pullback down to the 1 year moving average, currently at 777. It was only from there, the pullback, that we saw prices move significantly higher. Through the 2014 high at 855, the 2012 high at 963, and the 2011 high at 1001. These three levels were the main resistances overhead, now supports, until prices broke free higher, much as in early 2008, though not so far. Prices have not achieved those levels, despite there not being much in the way between 1001 and the 2008 high at 1394. Instead, prices stalled ahead of the potential target X1 in the 1340 area. Okay, this is by taking a little bit of liberty with this market and calculating the size of a potential move higher if the action from 2012 to 2021 was indeed a rounded bottom. A secondary target X2 would be in the 1485 area. Now, there is the possibility of looking at that period as a possible rounded bottom, but you would certainly need to use a bit of imagination to see it. This leads me to the twofold possibility of the 2018 to date and the 2014 to date actions being possible ascending scallop patterns. These two are still early on, and we would need to see if there is indeed hesitation, maybe around the previously mentioned highs or the recent 50% Fibonacci line at 840. It would all depend if we see some consolidation in those areas with a desire to move higher still afterwards. Minneapolis wheat. Okay, a different time scale to all the previous markets I've covered today so far, but here I can keep my normal daily chart instead of looking only at a monthly chart to get some definition. Additionally, please ignore the different colors for the labels. There is no special significance in them. It's just my chart system playing silly buggers. The main move here happened on the 1st of March when the market broke clear of the prior mid-January to early March ascending wedge pattern. That started the move higher, quickly reaching its targets and disposing of such resistances as the July 2012 high at 1034, the May 2011 high at 1055, the May 2008 high at 1003, and the April 2008 high at 1166. Interestingly, the market peaked at the old gap left over from the change back in March 2008 between 1208 and 1419. I guess that gap was just too much to fill in. Anyway, Tuesday this week's daily key reversal down turned prices back down, such that for yesterday and today we have seen a base on the 2022 50% Fibonacci line at 1042. All these actions allow me to draw a fresh April 2021 to January 2022 bullish Andrews pitchfork. Currently the market is a little underneath the middle time, currently at 1099. This pitchfork has not been that good as support or resistance, but I'm hoping that it may provide the main bullish angle of attack of this market. And that is something we'll have to see. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.